All right, so it's been a while since we've talked about financing in real estate. So let's dive into it and let's talk about the bigger landscape of financing. I believe previously I talked about a small portion of the financing world, adjustable rate mortgages, conventional financing. So let's expand it out. Let's talk about everything that is potentially available to you as a buyer in the market that is looking to purchase real estate. We're here in Southern California. I'm in Orange County, where you're looking at a median home price of 900,000. LA and San Diego are somewhere in the 750 to $800,000 range. The Inland Empire is about 540,000 to purchase a home. Obviously, your situation is different from the next person, so you may have very specific needs for financing. There's 16 different types of mortgages that are on the market right now, believe it or not, but not everyone fits the profile of each mortgage type. So you really want to make sure you're working with a lender that knows what they're doing and has a large, diverse assortment of programs that could potentially fit your needs. And then obviously you probably want to include in a real estate professional that knows the market as well and can help guide and counsel you through the process as well. So let's talk about the different financing options. We're really going to lump it into about four categories. And from those four, we can kind of dive into what each of them means and what they may be able to provide for you. So category one is probably your most popular, it's your most known. It is your fixed rate mortgages, your conventional loans. These are your 30-year, 20-year, 15-year fixed rate mortgages, meaning the interest rate is locked in. You know what you're getting. Unless you refinance, that interest rate won't change. Okay, so most people know this. You can do 20% down, 15% down, some cases even 10% down. The benefit of the fixed rate mortgage is specifically conventional loans is you do not have PMI or private mortgage insurance if you're putting 20% down. And if you're somewhere in that 15%, maybe 10% down range, your PMI or private mortgage insurance is going to be very small, very low. The relevance of this is that private mortgage insurance does add anywhere from, let's say, 50 to 80 bucks monthly onto your mortgage payment to several $100s. So it's very significant. The more you can put down, the less PMI you have to deal with. And if you hit that magic number of 20%, you have none. Okay, so section or category number two of mortgages is your adjustable variable rate mortgages. These are called ARM or adjustable rate. These can be really useful and fruitful if you know what you're doing. They can also get you in trouble. Back in 2008, there were a lot of homeowners who had gotten adjustable rate mortgages but didn't really understand the implications of having those if the market got bad. And obviously, we know the Great Recession, 2008, 2010 timeframe, it got bad. And a lot of people were caught with their hands in the cookie jar. And what was once a great product turned into a nightmare for many of them because the mortgage payments ballooned to monthly amounts that were ridiculous and hard for people to maintain. An adjustable rate mortgage essentially just means it's going to have a fixed rate for, let's say, a 5 or 10-year period of time, but the remaining term, which could be another 25 years as an example, every year it can fluctuate depending on how the market is doing. So referencing back to 2008, when the housing bubble burst and the economy tanked, you had people who had great low fixed rate mortgages for 5 to 10 years, and then suddenly they popped up and they were looking at mortgages that were 3 times, 4 times as high as it initially was. So you really want to understand what you're doing. and probably you're only going to keep the adjustable rate mortgage for a short period of time and then either pay it off completely or refinance into something entirely different that's a little more stable, depending on how the market does. Your third category is your government-backed loans. Now, this has a lot of offerings that are very popular amongst first-time buyers. In this category, you have your FHA, you have VA, USDA loans, and then in some cases, depending on the state or the area you live in the country, maybe there are local loans and offerings available to you as well that may be backed by your municipalities in that local area or your state government. FHA, first-time home buyers, this is a great option to dive into just simply because you can go as low as 3.5% down on the down payment, which is fantastic. Because here in California, as an example, you're talking conventional loan. Let's just use the median home price. You're looking at $900,000 to roughly $1 million as your purchase price, which means you're coming in with somewhere between $150,000 to $200,000 down. I don't know about you. I don't have that money stored in a bank account, so I got to come up with other options to buy my first property. So 3.5% is much more reasonable. You can scrape together, save, and work towards having that kind of down payment versus 20% down. Okay. In addition to that, they are going to also be the owner occupied option. So, first time home buyer, you're going to live in your first place, but it does give you some flexibility where you can also use it as an investment. So this allows you to buy duplexes, triplexes, fourplexes, condos, and then also rent them out. And in some cases with FHA, there are also investment options where they will provide a little bit of additional capital to help you remodel and update the property as well. So there's some cool things that can be done with FHA. The downside to this is this does have PMI, the private mortgage insurance, and it can run pretty high. So you want to make sure you have a conversation with your lender to understand the implications and the cost to you. Second option is VA. There are a lot of vets out here, and at the minimum, my personal opinion is we should definitely be able to help any and all vets that have served in this country be able to afford getting into a house. So the coolest thing about VA is you can come in with no down payment, and the VA actually assures the banks, the lenders, that it will be covered in the event that the military person is not able to cover the mortgage. So it's a beautiful thing. Talk to your lenders, the ones that specialize in VA loans, and learn a little bit more about how all of that works and how you can get yourself in the door with that program. USDA is for typically your rural homeowners and buyers, folks who have farms, dairies, ranches, etc., that can potentially qualify for it. So again, you want to make sure you are talking to a lender that knows that product and knows that part of the real estate world well and can walk you through it knowledgeably. Okay, so now our fourth and final category of financing is what I consider the miscellaneous or exotic loan offerings. Depending on your specific needs, these may be a little more tailored to what you need for your real estate purchase possibilities. So think second mortgages. If you needed a second mortgage, if you needed a jumbo loan, which a lot of people here in Southern California, that's going to be quite often because the purchasing limits on a normal loan are reduced, or you hit your ceiling faster is probably a better way to put it for a lot of the properties here, just because they're so expensive. So you may need a jumbo loan that gives you the ability to qualify for the type of loan that will allow you to finance it, the entirety of it or most of it. You also have things like reverse mortgages and reverse purchases. This is catered more to the 60 and over community, just simply because it's one of those programs that is there to help support our senior citizen community, help them manage their monthly payments, and also potentially promote more activity in the real estate market. But in a nutshell, these are all of the loan offerings that are available to you. It's very important that you have a conversation with knowledgeable lenders that know what they're doing and can walk you through the process. And then, of course, talking to a real estate agent that maybe has a lot of contacts and they have experience working in this as well. So that's it for Real Estate Talk today. Hopefully you found value with this. Make sure to like, comment, subscribe, share it with other people. And I'm going to leave my contact information in the video. Please reach out to me. Let me know if there's anything I can do for you. But in the meantime, wishing you the best with your home hunting search. Blessings.